This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. It's 2/26/21. This is show number 214. Well, Nick, markets are trying to rebound after yesterday's slam, huh?
Yeah, they're making a pretty decent little attempt here. This is typical. Once you have a 90% down day, very often you'll see some kind of a bounce. The Nasdaq is the best performer today. That's up about 1.2%. The Russell's up about a little under 1%. So you're getting a decent rebound today. We are seeing, technology, which has been the laggard. That's getting a pretty decent bid here. And then you have financials, which have been very strong. They're weak today. JP Morgan and Goldman Sachs are both down about 2% or just shy of 2%. And you have energy down today, and that's been a big winner as of late. Today you have the XLE and the XOP both down over 2%. So a little rotation there, but ultimately, I think this is end of month. You may be getting a little end of month window dressing out here. And like I said, when you have a big downdraft like yesterday, sometimes you get that bounce. But it will be interesting to see where we close the session. That will tell us a lot more.
Yes, it will for sure. As you always say, it's not where they open, it's where they close. But it looks interesting. So Treasury yield, up to 1.47%. That's higher than it's been in years.
Yeah, actually, this morning, yields were as high as 1.61%. So now we're back down to 1.47. So we've pulled back a bit, and the market's like that. The markets right now are rejoicing. It seems like they're rejoicing when yields pull back. Now, just to let everybody know, yields are very, very extended. They're very stretched in the near term. So they need to pull back, and that's understandable. That's the way charts work. But longer term, I believe they're headed a lot higher. So at this time, the market doesn't seem to like higher yields, but yields are only going higher because there are bigger problems on the horizon out here. And that's my take on things. These correlations at some point could break apart, but right now the market is not acting favorable when yields start to rise.
We'll get into precious metals in a little bit because the yield situation is having a temporary impact on the metals. But for right now, the market, you still bearish?
Yeah, nothing's changed for me. I think that you don't go down a straight line. These are markets that are putting in what I call a rolling top. So you're going to get bounces and nothing goes down a straight line. But I think there's lots of headwinds on the horizons for the upside.
It's interesting because that's when I think I have all your nomenclature down and all your terms come up with a new and rolling top. Just define that for us.
Well, a lot of people when they look at when they try to find market bottoms, it's very definitive. If you just go back to March of 2020, and we put in that big high volume low, and then you get that high volume reversal day, and then we get what we call the V bottom. But you don't get V tops. You always get what we call generally a rolling top, and it's a process, especially when you're up this much, and especially when markets are so frothy, and you have all of these different dynamics taking place in different industry groups and sectors, and there's just so much happening. You'll see that what happens is you go up and you don't make that sharp top like everybody thinks, but really the reality of it is we have a top in on February 16th. If I were to tell anybody when did the market top, they would probably say 2 days ago on the 24th. Meanwhile, that was a lower high. So you have to just watch the charts and you just try to let them tell you what to do. But yeah, I think we're in the formation of a rolling top, and I think we're going a lot lower.
How long will the rolling top last?
Well, it's a formation. So how it usually happens is people just keep, like today, they get back on board, they buy back in, and then ultimately it flushes them out. And if they're the weak hands, they start to sell, and then it amplifies the downside. So I think we're probably I think that the top is already in personally. If the market makes a new high, then I'm wrong. But that's why I use stop losses, and we'll see where how it plays out. But you never know exactly how a rolling top can last. Sometimes it could be weeks, sometimes it could be a month or two. If you remember back in 2020, in early 2020, I got pretty bearish around January 20th. And that was the Martin Luther King holiday. I wrote to my members. I said, hey, we're looking for this market to top out. My forecast says, late January into mid-February, we're going to roll over. And we had a sell-off then, and then we rallied up for, all the way till February 19th, and then we cascaded lower. And, the market actually this year looks very, very similar to that. So, we just have to take it in stride. You never know exactly what it's going to do. But when you take out certain levels, then you know that the next sell-off is going to be more substantial, and it's going to have a much greater velocity to it. So, it's just you wait and see, and you just navigate the charts every day.
Yeah, so it's a parallel to last year, and that's kind of interesting. And so we're running out of greater fools in this market, aren't we?
I think that could be the case. I do think. It's just amazing, but I understand it. People don't do what I do. Most of them, they're not looking at things I'm looking at. What they're doing is, hey, they're looking at, wow, there's a vaccine, there's a reopening, but what they don't realize is the damage that's been done on the charts. And what they don't realize is that you have yields going up, and the bond market is talking now for a reason. And if you just look at, some of the economic data that we have out here, I don't really follow that stuff. I've never been a big fan of economic data because I'm a chartist at heart. I'm just looking at the charts. But I'm seeing some of these things, and I'm saying, oh my goodness, people are not realizing what's happening here. And the markets, when they start to talk, they're a lot stronger than what everybody thinks. And the markets, they'll react. And we've had some really, really good distribution signals for weeks now. Every day the market sells off with high volume, then rallies back up on light volume. And I've been telling everybody, when we get that high volume sell off, you better beware. And we got that yesterday.
Nick, so looking at this, do you follow insider selling at all?
I look at it from time to time. I definitely look at it from time to time, especially when we have lofty markets like this. And there's been a fair amount of it, but I haven't seen anything all that unusual.
Okay. All right. I was just curious if the insiders had an inkling, but everyone's so carried away. My daughter works at a large social media company, and she mentioned yesterday that some guy there, they had some kind of stock pool info, and somebody in her office made $2 million in a day. I don't know quite how he did it, but obviously he picked something right. Maybe he bought GameStop before the rebound again. Well,
possibly. I mean, GameStop has been on fire again once more, but today it's been all over the map, and it's actually down about $10 as we speak. But some people, I guess, can get involved in something, do something with the options. I'm really just a technician. I just look at the charts, I do the math behind it, and I just try to find out where the moves are going to be made on the highly liquid equities. And but the GameStop stuff and the AMC and the COS and all of that's not for me.
Yeah, me neither. Don't have the appetite. Now, finally, we go to gold, silver getting slammed today. Gold down over $40 the ounce on the spot. Silver down $1.25, and we're getting close to that 1700, which is exactly what you predicted. And I have to admit, Nick, I was skeptical. I wasn't sure that it was going to happen. So is this going to be a short bottoming process, and then it's going up from here?
Yeah, I nibbled into some gold today. So I love when these things get hammered like this. To be honest, I gave the level out here. I said the low 1700s, anywhere from 1700 to 1730 on gold futures. Right now, we're at about 17 and a quarter. So I nibbled in. Gold miners, I told you, would get to $31. We'll probably pierce that level. That's exactly what happened today. Right now, the GDX gold miners ETF is at 31.30. So I nibbled into that as well. And I gave these levels out to you, I think, months ago.
Yes, you did. You did, and I was skeptical. I said, "How can this be? How can this be?" But the markets don't go by rationality or expectation, and they serve to frustrate the largest number of participants' expectations, of which I guess I'm one.
Well, and you're not the only one. I mean, the majority of the people right now, because the yield's rising, they want to stay away from gold. Right, rising yield historically is the negative for gold. And that's the story that you're going to be fed on the television and on the financial news networks. But this is where I nibble in, and this is where I take a position and look for a nice move to the upside. When everybody hates it, I love it. But I've worked out this level a long time ago, is what I was expecting, and now it's showtime.
So to all the naysayers who said, "But Nick missed the rally in silver last summer," we can kind of show them that there was a method to your madness.
There usually is. I've been doing this a long time. It's not perfect. And unfortunately, I hate to admit, you're only as good as your last trade in this business when it comes to the people that, watch you or follow you. But fortunately for me, I've kept most of my members have been around, 85% of them for the over 10 years now. So that kind of says something.
I mean, you totally nailed this one, Nick. I have to give you credit for it where credit is due. I mean, I was really skeptical because you kept saying there's one more big decline left. Now it's off to the races, isn't it?
Well, it could be. I mean, I'm humble enough to know that maybe I'm wrong and it could be lower, but this is where I take my shots. And, I like it that nobody out there on the street likes it. So even, when I was saying the market was getting frothy and, get ready for a sell side, nobody, TV was just CNBC, Bloomberg, and everyone else. These Fox Business, these guys were roaring bulls. So, I love it when everybody's on one side of the boat. I'm always going to go to the other side.
Yeah, hey, you zig when they zag. And I know a lot of other really successful contrarians, but I know people who've made money going along with the crowd, too, the momentum people.
Yeah, when you have a trend, you definitely want to go with the crowd, right? That's only going to help you. I don't always want to be opposite the crowd. When there's an established trend, I want to be with the crowd. But you got to remember, the stock market has been going up now, into February. I mean, February 16th was the high in the S&P 500. Gold topped out in August, so gold has been declining, since August. We went and made that parabolic move. Gold miners have, we're at $45 plus. Now we're at 31, and everybody hates it now. It's just baffling to me when things come on sale. People don't want to have any part of it, but I guess that's what gives me my edge.
That's why the opportunities keep presenting themselves where some people see horse manure, others see dollar signs and gold. And certainly that's what we're seeing here. Well, I think we'll leave it at that. We'll go for some questions next week. Got a stack of questions from people out there. A lot of bashing about your take on Bitcoin, and bashing me too. They think I don't know anything about it and I'm ignorant of it. Because you know what, Nick? Bitcoin only goes up, right? Did you know that?
Yeah, well, when we were bashing it, though, it was, basically, I believe the day we started to talk about it, it was somewhere around, 58,000. You know where Bitcoin is today? It's at 47. So.
Yeah, but that's just a temporary setback, and it could well be.
No, when everybody loves something, I'm gonna shy away and not like it. That's just the way I operate. That's the way my brain is wired, being in this business for so many years. But I'll tell somebody, if Bitcoin gets down to 33,000, I think you probably could make a trade there.
Hey, my mistake in Bitcoin. I thought it was going to go down to 2,000, which would be a 90% retracement, which isn't unusual in these things. It only got down 82 or 3% decline, and then it hit 12,000. Once it broke 12,000, I knew it was going higher from there, but I had no idea it was going to go this high. You can't buy everything. Cryptos are not my thing in terms of investing, but I do believe there's a future for them. It's interesting because I got an email from somebody, an FSN community member, who says that Catherine Austin Fitz is saying that they created them, the government, and they encourage investors to go in them, so it actually keeps money out of sectors like precious metals, so it's a distraction. I'm not sure if that's true or not, but I thought it was an interesting comment nonetheless.
Yeah, I don't have any opinion on that or knowledge of it, I should say. But sure, that's certainly possible. Got to remember, gold is a central banker's worst nightmare. I mean, it's just that simple. I wrote an article about that probably 15 years ago, 14 years ago. I said gold's a central banker's nightmare because, and I'll never forget, Ron Paul questioned Ben Bernanke when he was a congressman, and he said, do central banks buy gold? And he said, yes. He goes, why do you buy gold? Because it's real money? He said, no, we buy it because it's tradition.
Yeah, tradition. I remember that.
I'll never
Fiddler on the Roof tradition, right?
I'll never forget that answer. And I said, oh my goodness, I might have to go buy more now. But
Just for tradition's sake.
Just for tradition, it was just baffling to me that he would say something like that. And
absurd.
Just absolutely absurd. But this is the world we live in. A lot of absurd things go on.
Yep. I couldn't agree with you more. And hey, we're going to see a lot more crazy stuff go on, a lot more crazy stuff happen, no doubt. And I'm excited by it, a little fearful too, but hey, the future is always uncertain. So we're just going to have to see what happens. In any event, make sure you go over to inthemoneystocks.com. It's not too late to cash in on that once per decade opportunity that Nick has outlined there. And make sure you monitor the Twitter feeds. It's at ITMS, at Nick Santiago 01, at Kerry Lutz. Email kl@kerrylutz.com. We'll make sure Nick gets them and answers them. Nick, we will talk to you again on Monday. Have a great weekend.
You too, Kerry. Have a great weekend. Thank you.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.